Welcome to Kentucky Horsepower, the official podcast of the Kentucky Automobile Dealers Association.
Hi, and welcome everyone to another edition of Kentucky Horsepower, the official podcast of the Kentucky Auto Dealers Association. And I am your host, Jason Wilson, and with me today is Kevin Tynan, Director of Research for the Presidio Group. Kevin, how are you, sir?
Doing great. How are you?
Doing well. So, obviously you're one of the first people I thought of in lieu of recent events here as we enter in April, specifically as related to tariffs and, all the impacts that may have, et cetera. But as things went into effect last week, I thought it would be important to maybe wait a few days and see how things go, as it's such a very fluid situation. In fact, even just as of yesterday PM, the Treasury Secretary Scott Bessent stated that over 70 countries now have reached out to sort of discuss trade with the United States and what that looks like. So certainly a lot of response, but so let's just dive into it from your perspective, what you're seeing. Let's talk tariffs a little bit, what it means in the short term for starters, what it could mean in the longer term. So I'll just let you take it away, Kevin.
Yeah, and I think those are two very different conditions, right? What we're going to see in this short term, right? And here's a good example. You look at the first quarter new vehicle sales, right? You have a reasonably normal January, February, and then as far as seasonally adjusted rate, March is like a 17.8, which is probably the best month, the best March, and I only looked at data going back to the 20 years to
Right.
05. And so it's the best March in 20 years. And it's probably the best month seasonally adjusted since about 2017. So
Wow.
huge pull forward in the short term. I think the longer term effect can be very different, and we can talk about it. And I think it's going to be a big topic of conversation, through the season,
Right.
which is, ultimately, it looks to me like obviously it's inflationary for everything, for new vehicles, used vehicles. And I think it's also supply constraining, right? Which if you think about that, we very recently went through a very similar situation in 2020, right? Supply
Right.
constrained. The difference is, and this is notable, is that in 2020, everything stopped, right? For every automaker.
Right.
And I remember looking at the production numbers for April of 2020, and something like in all of North America, about 4,000 units were produced. And that was a couple of Hyundai Kias in Mexico. And normally production in North America is about 1.5 million vehicles per month, right? So it was stark in
Right.
how everything just stopped. But if you think about that supply constraint that then carried through the pandemic period, from a dealership perspective, 2022 was the best year profitability wise in history.
Right.
And that was a 13.8 million unit new vehicle market. So if in fact this is after we get through this sort of pull forward of March and April, vehicles are still going to be built. And again, it's different from manufacturer to manufacturer, depending on what your production footprint in the US specifically looks like relative
Sure.
to Canada, Mexico, or imports. But if we're looking at this like it's a long-term supply constrained market, supply demand get in balance, prices firm, margins expand. And I feel like this is we've been calling it like a tariff pandemic, because I think some of that dynamic is going to be very similar to what we saw by the end of 21, 22. MSRP, transaction prices were above MSRP.
Sure.
Vehicles were in today, gone late today, right? Inventory turned over quickly, and margins were wide. And I think if this is supply constraint, we can see that all over again.
Yeah. So in many respects, it's really interesting, and I've talked to some dealers, sort of comparing a little bit to that COVID timeframe to where we're entering now, based on the points you're just saying. And so in some respects, I guess if you're looking for a silver lining as a dealer, you think about all the things that dealers have been through we just discussed COVID. 2008 doesn't seem that long ago, right? And it seems like the one constant is dealers find a way to thrive and find a way to work the conditions regardless. I mean, is that from a dealer perspective? And I know you talk to dealers as well. You talk to my counterparts. What are you hearing from that audience?
Yeah, obviously there's some concern, right? Because there's a certain part of being a dealer, and we talk about this all the time, right? One of those things is that revenue diversity. So this is something that impacts directly the new vehicle market. And again, depending on what brands you represent, this can be very different, right? So then when you think about the pre-owned market, right, prices going up, which means there could be some margin opportunity there. It's going to be difficult or more expensive to acquire used vehicles, but you got your fixed ops, parts counter, service bays, F&I. I think the thing from what I've been saying to dealers is expect that this is going to be a smaller market in terms of total new vehicle volume. So like you talked about 08, 09, right? And then we came out of that, and then right, the bottom I think was like a 9.5 million units, whatever that was,
Right.
2010 or
Yeah.
09. But then we climbed back out, and by 2016, it's a 17.5 million unit market, right? When you look at the beginning of the pandemic, right, volume drops and it climbs back up, and we do a 16 in 2024. We don't quite get back to that new high above 17.5 of 2016. And I think that's going to be the key here, right? We drop down, and then we are kind of hitting this 16 million unit ceiling, which again is not a bad thing, right?
Right.
Organic demand is somewhere in that ballpark, call it
Right.
15 to 16 million. Anything above that starts to get bad volume, right? It's volume, right? And it's foot traffic and it's people in the showrooms, but the margin on that,
Right.
that those extra units are bought and they get expensive.
Right.
Now, the other thing I'll say about this from a dealer's perspective is that, a lot of if this is in fact a smaller market going forward, I feel like the franchise dealer base has already right-sized to that 15 million unit market. Again, great profitability at 13.8 million units in 2022, which shows you
Right.
that their break even is much lower in terms of units. I think so now if you as a dealer, you realize this is a supply constrained market and we're going to be in that 15.5, you're kind of already there, right? You've adjusted your business to reflect that kind of volume. Different story for the manufacturers, right? I think there's a lot of excess capacity globally, and the opportunity there for the manufacturers is like you look at the fourth quarter of 2024. Automotive factories in the US ran at 65% capacity utilization. So when you think about the units of the brands that aren't built in the US or are imported that may or may not be built over the next however many quarters, there is an opportunity for the domestic factories to ramp some production because the stats are showing that they're not fully utilized as we go now. Probably want that number to be about 80%. It was 65. I don't have the first quarter number yet, but the fourth quarter was a 65% utilization. You can push that output up into 80%. There's more units. So kind of like what happened during the pandemic where the world ended sort of March of 2020, you didn't really see that real tight supply and demand constraint until the end of 21, 22, because units were still being built. I think that's a similar situation now, right? I don't think, the spigot turns off today. You're still going to have output. So I think that's why I say the longer term is going to be very different than the near term, in that there will still be units. More of them will be built domestically. They'll be more expensive. But ultimately, if everything stays in place, which is a huge question in and of itself,
Sure.
as we see it now, you could be looking at a 26 into 27 where you get that supply demand dynamic that's so tight, driving margins reminiscent of what we saw in 21 and 22.
Yeah, look, you just said a lot there, and I want to go back on a couple items that you mentioned regarding the domestic production, where we are in capacity. I think you said we're about 65% right now operating in that, and push it up. So, you hear the argument, right, as far as against the tariffs and regarding the overall goal, right? What's the overall goal? Well, it's to bring jobs back to the United States, bring production jobs. Some of us on here today will remember the 1992 presidential election when you had Ross Perot talking about that giant sucking sound, right, of the manufacturing jobs. Well, years later, and I've seen a lot of pieces written on this, he's right in a lot of ways as far as what the net result is. So that argument of, well, you can't just, it's not turning on a spigot. It's going to take years to adjust and adapt and do those sort of things. If I'm hearing you right, we go from 65% to 80% or even beyond. It could be it may not be that long, or it may not be as dire a situation. Is that kind of what I'm hearing you say on that?
Yeah, and I think that's the issue, right? Is that what is the goal here? What's the purpose? Now there's a lot of significant hurdles, right? One of them to me is, and not, politically I have no dog in this
Right.
hunt. So the thing is North America, right? And NAFTA, the free trade agreement, and USMCA,
Yep.
which I always want to do YMCA, like but there you think about that system was set up for North America to be kind of a single unit, right? Where trade between Canada, US and Mexico and Canada, right? Like it was kind of one entity. And the problem there is that the cost structure of labor is very different in Canada and the US than it is in Mexico, right? So to be able to produce small cars or small affordable vehicles profitably, which is the key, right?
Right.
That those jobs went to Mexico, right? So now that's the one thing that, or there's not one thing, but that's a thing that feels a little bit like a rug being pulled out, which is like, hey, Mexico, no good anymore, right? Like, so I think that's where you think about the affordability of like, hey, you can have affordable vehicles, but they can't be built in the US and they can't be built in Canada. So this is a question of, in its purest form, do you want an affordable vehicle or do you want a job? Right?
Right. Right.
It's one or the other. And I think that it's very painful what the industry will have to go to be able to bring manufacturing back to the US. But that's the challenge. The other thing I think about too is that's going to be a huge hurdle and a challenge, is because of how divisive everything is in this country now. What has to happen structurally, economically, financially in the industry for the next administration? And imagine it's a Democrat president to say, you know what, that was actually good. It's actually working. We're going to continue to do this, because then everything just unwinds in 4 years.
Right.
Right. If the next guy comes in or next woman comes in and says, hey, we're undoing all of that, right? And now all of this was for naught. So that's an interesting question to me, is how does the administration claim success, and how do they show enough success that it actually is something that gets carried through, like you said, for a generation or two of manufacturing in this country? Because really everybody, what it is, it's, if you want to sell it here, you build it here. And
Right.
and that's kind of what happened after World War II,
Right.
right, with Japanese manufacturers, and it's really an extension of that. But to your point, what was happening before doesn't seem to be working either, right? This globalization
Right.
of our manufacturing. And I actually talked to somebody yesterday who was talking about, well, 4% unemployment in the US, we're fully employed. And it's like, but what's the makeup of those jobs?
Right. What's the
Right.
income? What does that look like? I mean,
Right.
you can make the argument, especially the Rust Belt states that spoke very clearly in this last election cycle. And this discussion was whether you or support this or against it, what have you, what you cannot say is this subject matter was not discussed regularly and heavily up to the months prior to the election. So, the other side of it, of course, the concern is, the average new vehicle now is we're around $50,000 a unit. You have high interest rates, so we already have this affordability issue, right? That we're
Right.
dealing with.
But we had it anyway,
Yeah.
right? So you think about before tariffs, look, in 2016, peak volume 17.5 million, average transaction price was 35. Here we
Mm-hmm.
are, in 2024, we do 16 million units, but average transaction price is 48,000, 49,000. So actually that revenue pool is actually much larger by selling 1.5 million fewer units. So price, and the way I explain it to people is this, right? Put very simply is, if you survey 100 people, 100 people will tell you they deserve to make more money next year than they did last year,
Right.
right? Now multiply that by every person who touches a part in a vehicle.
Right.
It goes up, right? And everybody believes they deserve to make more money, and take that and cross the entire automotive value chain from raw materials to the retailer, and then explain how you're not going to be facing everything is inflationary, right? At that point. So this is
Right.
no doubt about it. Vehicles will cost more. But the other point too, Jason, when I look at it, and again, going back to 2016, and you've probably seen this, I had this slide in my deck most times, which is the domestic manufacturers had about 10 sub $30,000 nameplates. Then keep in mind, average was 35. So 30 and below, 10 nameplates from the domestic manufacturers sold about 1 million units in 2016. None of those nameplates exist today, right? And it's not because they couldn't sell them, they sold 1 million of them.
Sure.
Right? You're talking about 250,000, whether it was Chevrolet Cruze or something at Ford Focus or Fusion or Fiesta. They could sell them. The problem is selling them profitably was the challenge. None of those nameplates exist. So this market has moved, up towards truck versus car. That's driven prices 40% higher since
Right.
2016. So that mix shift is inflationary also. And that's to cover costs, right?
Right.
That's for a manufacturer to say, well, everybody of my 100 people want to make more money, right? So now we have to shift our mix to make the more profitable vehicles and be able to pay those people and to cover fixed costs and variable costs, and there you go, right? So this is the product mix that does it. All you sub $30,000 vehicles, you're done because we can't make money on you. Now,
Sure.
if you think about, now you can't even produce it in Mexico affordably or profitably. So now it becomes a situation where you either, as a manufacturer, you either have to use those unprofitable vehicles as your introduction to your brand, or if you're a foreign manufacturer, maybe your government subsidizes you to be profitable at that end of the market. But nobody wants to be there because it is money losing.
Sure. It's interesting. I was with a group of dealers for lunch last week, and obviously we were talking about these issues. And one of the dealers says, while it's tough to be a dealer in this uncertainty, imagine being a manufacturer in this uncertainty. And you think back to let's just go back to the last 4 years, right? Where the previous administration and their policies were all about EVs, right? And there was this huge push on EVs to the point where plants were being built, major investments being put into facilities, many right here in this country, right here in Kentucky, actually. We had that going on. So, and then it's changed, and now they have to pivot, and there's, to your earlier point, I guess that's the real challenge, right? Is this going to be a sustainable, the efforts being done today, is that going to be sustainable, to your point earlier, a generation, the next 2 generations? Or is it going to be, we're going to unwind and here we go again, right?
Yeah.
And look, I want to pivot a minute. We talked a lot about the, obviously tariffs and new cars and everything else. So, hey, people will just buy used cars, right? Well, what does that do to the used car market that we're already seeing some challenges with?
Yeah, look, and you're right, and I've been saying that also, just to touch on your previous point, is that the I think the real structural burden on the manufacturers in this tariff situation is much greater than it is on the franchise dealer base, right? Again, I feel like that cost structure was rationalized recently. They're resilient, they're creative, they're nimble. So if it's fewer units, we do more of this, less of that. So I feel like
Right.
that there's revenue diversity and flexibility at the franchise base that doesn't exist for the manufacturers. You're talking about structurally changing your production footprint to work in this new environment, which, to your point, may not be the same environment 4 years from now or
Right.
10 years from now, whatever the numbers, and that's very difficult. Um, but like I said, I think initially you're gonna absorb some of the underutilized capacity that already exists in this country, and then you can kind of build out from there. Regarding the used car market, and it's a very interesting point, and I think that even before the tariff situation, which obviously is inflationary for the used vehicle market, the pre-owned market was undersupplied already, and
Right.
that goes back to a combination of lower volume, new vehicle volume, and think about a 3 or 4 year lag on what sells new becomes used 3 or 4 years down the road on average, especially when you think about leasing.
Right.
So even using leasing as an example directionally, you go to a low base of new vehicle sales, that tight supply demand balance basically wiped out incentives in general. You didn't need them, right? As a
Right.
manufacturer, as the factory didn't need to throw money on the hood
Yep.
because inventory and sales were so tight. In that instance, ultimately, leasing is a form of incentive. At the end of
Hmm.
the day, it creates affordability for the consumer
Right.
and it helps you manage your inventory. So if you don't need cash on the hood, you don't need leasing. So now you have this sort of double whammy of low volume and lease penetration that goes from 30% to 17%. And now the off lease market 3 years in the future goes from 5 million on average through 2019, which comes back in 2022, thinking about that 3 year lag,
Right.
to now in 2025 is actually the bottom, which is 2.5 million units. So that off lease market, which is, certified pre-owned and it's the latest technology, lowest mileage stuff, it's maybe it's a small percentage of the market, not small percentage, but it's 10, 20% maybe,
Sure.
if that. But now you have from 5 million to 2 million. So explain to me how the prices come down. They really don't.
Right.
So from the dealer's perspective, your acquisition cost of used vehicles is going to be a little bit higher. You hope margin can stay there, but I think you wind up fighting with two things. One, as a franchise dealer, you're going to fight with the Carvana, CarMaxes of the world who have to acquire inventory because that's their only business unit,
That's right.
right? A franchise dealer can say like, hey, look, supply demand is really tight on the news side. This is what happened in the pandemic. My front end gross is going through the roof. I'll go focus on that. You guys fight over overpaying for used vehicles. The other thing is that every peer-to-peer or private sale, you know, everybody thinks their stuff is worth more, and it probably is. So you wind up just selling things yourself on some sort of exchange, whether it's, marketplace or cars.com or whatever it is, because it's not a difficult selling environment. It's a very favorable selling environment. So you lose a lot to that private sale. So I, where I felt like as inventory was rebuilding in the new vehicle market pre-tariff, that dealers were getting ready to start to, because as inventory grows, here comes margin back down.
Sure.
And it was still above where it was pre-pandemic. It's certainly not where it was at the peak, but it
Right.
was heading in that direction, right? So now this is where that sort of creative and nimble franchise dealer base says, okay, we're seeing new come down because we got a lot of inventory, but the used market is pretty good, or fixed ops, or whatever you wind up doing
Sure.
to diversify out a little bit and to make up for the decline. I don't think the used vehicle market provides that opportunity just yet.
Yeah, I mean, look, to sort of summarize, obviously, and no pun intended, but a lot of moving parts to all of this, and it doesn't look to be resolved in the short term, but that could change. Look, there was just recently here in the last day or two, you have again a number of countries, the EU being one, saying, "Hey, they're open to, 0% tariff sort of thing." How do you, if you had a crystal ball, Kevin, how do you see this kind of playing out? Because some have said that, okay, those sort of discussions sort of lead to an off ramp if we want to, get off where we are today on this tariff situation and then renegotiate. But how do you see this playing out, I guess?
Well, I think that's the thing, right? Just in following, through the election, which, is not my thing. All I
Right.
care about is following the auto industry, right?
Right.
So, but from my perception of it is that things can change. One thing I would say to the dealer base is this: is that don't look at this near term, including like the March SAR, and think that that's the long-term view, right? Like,
Right.
I would say whatever you see happening now, think the opposite over the longer term, right?
Right.
Huge pull forward, expect things to really drop, right? No pricing power in the current environment, as it's going to be really tight and firm going forward, right? So almost think 180 degrees from what we just saw, especially in March. But the other thing is this: at least politically, I think, and just from what I perceive President Trump personality and business acumen to be, is right, he's not going to backtrack
Right.
by in no way. But what he will do is show a victory. So, and I find it very interesting to your point that, okay, so now here comes all these other countries out of the world. Hey, let's talk about this. It's like, well, that's kind of the point, right? Like,
Exactly
you
right.
so now if it sparks a change or a discussion that leads to a change, I think he can point to that and say like, hey, this is working, or this is what we were trying to do, and we're getting there. But I think it's really interesting too that, you look at the UK and they're talking about, hey, we need to protect our manufacturing, Jag Land Rover,
Right.
Rolls Royce. And it's like, well, that's exactly what President Trump's trying to do, is to
Right.
protect the manufacturers that build here.
Right.
Right. So it's kind of like justification for it, because you see other people either wanting to talk, because it's like, yeah, maybe there is an opportunity to bring this more in line.
Right.
Right. And so, but I think that's the goal. And I think if he can show some sort of victory, or point to something tangible that says this did what we expected and what we wanted, then things can change. But just to
Yep.
say like, oh, the stock market's down, or why are my used cars so expensive, or I can't find inventory, like, he's not going to bend because of that. He'll
Right.
bend because he's shown results.
Right. No, that makes sense. And look, we can go on and on this topic for sure, but I feel like, Kevin, I thank you for your time today. I feel like this was a nice overview of where we are today on the situation. It could be very different tomorrow or next week or next month. We shall see how all this plays out. But what I do feel good about regarding the industry that we both follow and love and have been involved with for our careers is that dealers find a way, manufacturers find a way. We seem to work and persevere through these challenges. It may look different than we expect today, tomorrow, but we always seem to find a way to move forward. And I expect this to be the same.
My dearly departed father always used to say, where there's confusion, there's profit, right? You just have to figure it out, right? There's an opportunity when things seem to be a little bit squirrely.
That's right. I think that's what we're seeing now. Well, Kevin, thanks again. We'll obviously continue to stay in touch with you on this and all things related to our industry. But thanks for joining us today. And ladies and gentlemen, thank you for being with us here on Kentucky Horsepower, the official podcast of KADA. And we'll see you all down the road.